gold to sellers, do your worst, then sell Lanci. The only thing that truly trends is humans extrapolating their rates of return emotionally. Everything else will regress to the mean at some point. Investors are being given a gift, and do not see it. Every rally in stocks should be used to lighten exposure to a crash, and every corresponding dip in gold should be bought from a balanced portfolio approach. You should be peeling back equity exposure on every new high, and adjusting your risk into something that is stable, holds buying power, and is liquid. That is the point of investing. Your home, your art, and your Bitcoin will not fit those guidelines. Gold and silver do. Do you think the millennials will be buying your 401k shares in 5 years? Don't be naive. No one went broke banking profits. And the Fed is handing you an opportunity to retire with enough money now, as they have moved the housing bubble back into the stock market. It took 10 years. Do you have another 10 years to wait if we crap out again? Protect your profits now. Admittedly, the title sounds like a gold bull rationalizing a losing position, as so many gold salesmen do, and we are long, and are not selling you gold. We are also swing trading from the short side. So it is what it is. It's jobs day and noon really THNKS that matters to Fed policy anymore. Brexit breakthrough agreed and shutdown avoided for now. A couple points before getting to the reason for our title. Let us first count the ways in which gold has had to deal with bad news these past 2 months. Counting the ways gold is bashed: fund liquidation, Trump tax bill, Bitcoin, Brexit deal, Venezuela default, bearish for gold, as they had to sell. And the usual short side players with deeper Fed-sponsored pockets, and the longs WOTH which they do battle. These are a few of gold's obstacles these past couple months. And yet here we are $100 above last year's lows. Kicking gold today's edition, the Brexit deal and gov shutdown avoidance alluded to above, along with the end-of-year pukage and Trump's tax bill, as we have written about here extensively, have all been major negatives for gold the past few weeks. And yet gold sells off again before the news comes out. Strange. To be fair, we are seeing more longs with end-of-year hopes selling these last couple days. There are some shorts getting in now, however. Just not enough to spur a sustainable rally, we think. Banks and the Fed in bet again, and gold suffers for it. Post-2008 banks have been on the outs with the Fed as risk managers. The Fed had mandated more risk be cleared through exchanges, and they have succeeded somewhat. In doing so, the border collies that run our monetary system have herded much derivative risk into a larger basket. TBTF became bigger and more centralized, like Fannie Mae. Their reason is this basket is more easily watched, and since they regulate exchanges, can be advised on policy. But along comes an existential threat not just to global fiat-backed governments, but to the U.S. banks, that are their overlords. And boom. They have a common enemy. And that enemy is Bitcoin. Gold is suffering real collateral damage now, as the banks pitch their new wonderful product to replace gold. And it is having an effect. BTC futures, regulation, and repression to follow. Note the complete banking industry turnabout to hailing BTC as the new gold on the coincidental heels of new futures contracts approved by the CFTC. Banks and brokers have a new product to sell you folks, and they are actually calling it a store of value, a new gold, if you will. This is in complete contrast not just to BTC behavior, volatile, and a wealth-generating currency, but don't call it money yet, but to gold itself, low volatility, wealth preserver, money, but not currency, line up suckers for a new product to be castrated, regulated, and repressed by banks through exchanges with government blessing and oversight. People not long Bitcoins will be buying futures on margin, while banks long BTC will be hedging and killing their much shallower pocketed but greedy clients. Let the fleecing begin in the new gold. JPM calls BTC new gold. Spoofing starts Monday. Love Michael. Hated 20s right. Michael Moore has been spot on in handicapping market moves given price triggers. Read update. Bear trend with a $1,700 target has problems. For more. He saw for different reasons than us, a large bull move fermenting last month. He gave a level where that was negated. That level was breached. Now, to our chagrin, he has called this sell-off from the $1,272 area very nicely. In the process, he stopped us from buying dips for now. But we wish he'd see the end. For our sake. Updating our levels. 1 hour macro trade system says we should be out if the market is here come December 31st. The VBS indicator has yet to be triggered for a longer-term volatility expansion. So according to that indicator we are still in a trading range. Hard as that is to feel when you are long, as we are. Point being, nothing has changed. We made the observation that funds like to get in above the 12-month muff or punts. They did, and they are now puking. We have a long position based on this, and are swing trading around it. We secondly stated that volatility would be expanding in 90 days. We are 45 into that and things are starting to percolate. We did say November would be one to remember. So that was a bit premature. We believed a $50 move one way was coming which would cause a spike in volatility and a follow-up move anywhere between $50 and $200. All of this is in play and lining up from our original statements to today's activity. The only thing you have to ask yourself is will you be in a position to buy gold if it drops another $50 and then another $100 from there? Because that is what gold is for. It is to be bought when it gets cheaper. We will be buying to hold for 12 to 18 months, at least as we roll equity profits into wealth preservation vehicles. We will also be trading it from both sides of the table. But this is what we do professionally. You should be peeling back equity exposure on every new high, and adjusting risk into something that is stable, holds buying power, and is liquid. Your home, your art, and your Bitcoin will not fit those guidelines. Gold and silver do. On combination, Michael says we may have another $30 or so of downside coming. This would trigger the VBS indicating a $50 $200 move relatively quickly in one or the other direction. Which brings us back to our original post a month ago declaring volatility is soon to expand in about 90 days. We also stated that a $50 move in either direction will yield another $200 in continuation or reversal of that first move. VBS trading algo levels for gold October 25th. Notes from a call today on potential gold trades. It looks like we will be seeing a move of $50 to $75 in either direction in the next 90 days. That move could be slow and orderly, or fits and starts. That is not handicapable or important to the system. If a move like above occurs, then we will most definitely get a signal to be long vol on a risk-reward basis, as the monthly indicator will expand directionally. Our first play would be to go with the direction at time of the trigger. Our second would be to stop and reverse at a predetermined level. This is a longer-term play than usual for the VBAS. so we will most likely express the position traditional way via long straddles. Direction would then be expressed by not hedging gamma on daily break-evens, but more like every 2 weeks, and then only half of accumulated deltas. In this way we would remain long/short in direction of the trend. Monthly, by straddles or hedged call spreads on a monthly settlement, above 1305, or below 1191 at it, now $1,338 and $1,192 per chart, below early entry, put on 1/2 position on a day signal, as described above. Exit everything on 3 bars, if not profitable. Gamma hedging TBD. Monthly chart updated today. Gold has dropped approximately $35 thus far from that call. A $75 drop from October 25th's level would be in shouting distance of $1,192, and likely trigger the indicator of even higher volatility. The plan is, gold drops $50 from that post date, triggering the VBS for expanding volatility. At that point one either goes with the trend, or waits for a quick exhaustive sell-off and reversal for a major rally. In simple terms, if gold trades $1,192, it will not sit there long. We will sell, if it hits there, initiating a short. But that is only to keep our finger on the pulse. Having a position in a market heightens your radar, and forces you to respect your discipline. Doing so will tell us if being short is wrong. This will in turn mean being long is right, and we will reverse hard. So, he rests to a market dump to $1,193, and what could be the beginning of an run higher. Yes, VBS also implies lower as equally possible from $1,193, but given the seasonal nature of gold and its tendency to make close at end of the year as funds sell, we're optimistic that the buy low and sell high rule of investment will replace our current swing trading behavior of selling weakness and buying it lower. This, as we described, all part of trading around a core long position. We love to start swing trading from the long side with a core long position. Stay tuned.